So with the US dollar index on this 4-hour chart, we were on the backside of that old bullish trend that fizzled out, came up to retest, um, and made a high last week, um, into the counter trend line. And that was before the market sold off on Friday with non-farm payrolls. And then we've moved up into some of that bearish impulse. We came in towards the 38.2, but we didn't quite reach it. So I prefer to see a market. I mean, coming up into towards it, it's fine, but I like to see the price actually test the 38.2, touch it, if not exceed it. But as part of my rules for trading, but for analysis purposes, it's come up significantly into that, on profit taking, whatever it might be. Uh, a sort of a change in sentiment with regards to the Fed, but it's blown off today for no rhyme or reason. I mean, other than we were fueled to come to, with that move up to come lower. Um, from a technical standpoint, from just looking at the charts, that was a move that was anticipated. We're below structures, we're below resistance, we're breaking down. The market is breaking down, and the bias, therefore, is bearish. All the while that we're on that backside and we're heading in towards, or we're now in there, to the target zone. Um, so technically, it's perfectly reasonable. Fundamentally, who knows? I mean, all of the Fed speakers, inflation is too high, it's not sustainable, interest rates are going up. That should be risk off. With regards to the CPI data, and we've got analysts here at TD Securities, they're suggesting that the data would have decelerated in June to the lowest month-on-month pace since 2021. So maybe there's an element of uh, expectations of a weak report. Um, but the Fed speak today is all being bullish for the dollar, and yet we're seeing a complete unwind on that. So um, I don't have anything along the wires that are telling me why the dollar has suddenly spiked lower. Looking around, not really seeing why in the move. No, it's a dollar move, so I don't have any answers. I'm afraid. Don't have any answers at all. I mean, coming back to the technicals again. I mean, really, with the bonds there, you've got the 10-year selling off at those highs, and you've got this. Well, the 2 years are just in decline. They've been in decline. They're staying in decline. So uh, yeah, so yields are off. That's all that can be said, really.